From Hamilton Place Strategies in Washington, D.C., this is the HPS Insights Podcast.
Welcome to another edition of HPS Insights, a podcast from Hamilton Place Strategies, analyzing current events impacting the business and political communities. I'm your host today, Bryan, DeAngelis, a partner at Hamilton Place Strategies. Today we have another episode in our new series with conversations with folks working in the cryptocurrency space. We have a really interesting guest, Will McDonough of Valkyrie Investments, who's been doing a lot of work in blockchain and cryptocurrency for the past several years. My regular co-host, Elliot Owensby, was given the day off, and I've brought in a couple of my Massachusetts buddies here, my fellow partner, Matt McDonald, as well as Brendan Walsh, who you all know from our macrocast of market policy partners. Brendan, you introduced us to Will a couple weeks ago, and I know I'll be made fun of for this, but you had me convinced when you told me he was a Boston College grad and had a Patriots history, so it was a no-brainer to have him on the show. But I started digging more into the work he's been doing and the work Valkyrie's doing, and it's a really interesting perspective as we sit here in Washington and debate a lot of what's happening in Congress and with the SEC on cryptocurrency. I think this will be a different perspective for our listeners and a really great discussion. So why don't I bring you in here to introduce Will and kick things off with us?
Yeah, we want to welcome Will. He's had a very, very diverse career from, radio to sports to working at a pretty large asset manager for years, and most recently very deep into the crypto space. Your current venture is Valkyrie, which offers a huge amount of fairly diverse crypto assets. I think you're up to 1.3 billion now. But what I really kind of want to maybe kick it off with is the ETF future product that you guys just launched. There's only two of them. And I'm sure you have some interesting stories of how that got approved. But maybe just kick it off and explain to us, exactly what is this product?
Yeah, thank you. Thanks for having me. Always good to connect with some Massachusetts people. I don't get to do it as often as I once did, so it makes me feel like home. So we at Valkyrie, over the course of the past year, have been lucky to get 3 ETFs approved, all with exclusive exposure to digital assets. We in cryptocurrencies. As you mentioned, we got NASDAQ's first ETF approved with Bitcoin, built exclusively with Bitcoin futures. NYSE has one that they launched that's been quite successful as well.
And that's 100% Bitcoin. There's no other.
Correct. So our product's called BTF, and it's just pure Bitcoin. It's built using futures. The way that I've explained the kind of regulatory side of that, and I think what ultimately got us through the tight crack of the door was, for a long time, the SEC was turning down anything with Bitcoin exposure. But what ended up, I think, breaking through is the BTF and the existing Bitcoin futures ETFs that are in the market are constructed all with already approved SEC products. So it's like the joke I make is it's like going into a Whole Foods salad bar and going to the front with your salad and them saying, no, we can't sell that to you. And so what do you mean? I just made this with all products from your shelves. It's just my basket of those things that you already said were okay. So what's different about this? And the reality of that is we just took already approved, CME, CBOE futures that gave great price action on Bitcoin and built an ETF exclusively with it. It's our job to actively manage that and do the rolls month to month. And we're doing quite well with that. I think our slippage, if you will, is about a point or a point and a half off true pure Bitcoin, which, as someone who's been investing in Bitcoin for over 5 years, being able to pay somebody 150 basis points to worry about it is a good value. We also have 2 other products that are approved in trading, one of which is Bitcoin miners. So it's all public companies that are mining Bitcoin, so you can get an interesting exposure through that. And then we have another one that's Bitcoin on balance sheet, VBB. And that's a product that invests in the companies carrying Bitcoin on their balance sheet. Tesla's in there, of course, Mark, all of the ones that you know. But
Square, PayPal.
Yeah, they're doing, and there's more and more of them, which is only further validation of the asset class. So we're quite proud of those 3 ETFs. We also have series trusts that give pure exposure to protocols. So, Ethereum, layer 1s, layer 2s, as they call them. And then we have a hedge fund that exclusively invests in DeFi more actively and exploits the kind of yields offered in those DeFi protocols and liquidity pools, which are spectacular. As a quick data point on that, our last month in that hedge fund, we have a stablecoin pair portfolio, meaning stablecoin A and stablecoin B locked into a liquidity pool, paying us an average across all of our pools of 42%. So massive yield. That's per annum, but 42%, massive yield for taking, in essence, no market risk. So we're totally exploiting and participating in that market. And then we're also allocating, to DeFi protocols more specifically and directly, which is more of a venture-like return opportunity than just pure Bitcoin exposure, which, is more than 50% of my allocation to the space. So I think, they both have an important role in the pie chart.
Will, tell us some more about that SEC process. As I said in the intro, we're following this pretty closely. I think DC in general has been kind of obsessed with since Gary Gensler has come into town. It was a good analogy, but how maybe painful was that process? How much education did you guys have to do with the SEC to kind of get them to open that door a little bit?
Yeah, and how long did it take? When did you guys start this whole process?
It's like anything else. A lot of wait and hurry up and wait and hurry up and wait. And the way the process with the SEC and many regulatory bodies work is they stipulate a defined amount of time that they have to react to you and to respond to you. And I don't believe they've ever responded sooner than the last day of that window. Is just precedent and is what it is. But what was interesting through that process is we were actually first in the queue, if you will, to be approved. And ProShares, which is a lot bigger company than we, was also in that queue slightly behind us. We were asked to make alterations to our docs in one of the comment periods, which added a 5-day window to our kind of cadence, at which point ProShares, who pays a lot of fees to a lot of people, jumped us in line.
Stuck in there? Yeah.
5 days later, they came back and asked us to take out the language that they had 5 days previous asked us to put in, which we happily did, and then we got approved. So that was a fun couple of weeks, but neither here nor there. We were approved within 5 days of ProShares as a, at the time, a startup, something that, we'll always be proud of. I told people, the day it happened, I told our entire team of 30 people, this is something you will reference in your resume for the rest of your life. And it's a tremendous thing to be proud of and to be associated with. And so, we're really rallying behind that. And as you referenced, up to 1.3 billion across products as of last week. This is a business that didn't exist 12 months ago. So we're very proud of that and we'll continue to scale it.
What about in terms of trading the ETF? Is there an arbitrage between the futures and the just Bitcoin?
So that's the key word, and I'm glad you brought that up. And it's going. I'll go into a different rabbit hole because of it. But to answer that specific question, yes. The only reason for that,
which is normal for any futures product. I mean, yeah, they don't trade on top of each other. Yeah.
I'll reference it as slippage, but really what it is you buy contracts by month, and so we'll buy. Like right now, we might own a bunch of February futures contracts. At the end of this month, we need to roll those into March futures contracts. And the trading fees of doing that and the time lapse of being able to be long the February and then long the March does create some slippage. And on average, that's about 100 basis points, 1%. You should assume it kind of is the cost of doing business for us to be able to perform that on your behalf.
Yeah, and that's pretty normal, even if you're just buying an equities future. Just for the listeners, trading I think futures is one of the most complicated financial products that we trade. You have to know a lot of fairly advanced math, and you get into Greek numerals like gamma and alpha, and gamma and theta. But as a product gets closer to that date, you can have some goofy things happen when it expires. Yeah.
And we saw that in oil, I believe.
Yeah, remember
last year, maybe 18 months ago. That was exclusively created by those futures rolling off, and there are huge markets of people that trade futures but can't hold physical.
Yeah.
And so in the oil markets and the gold markets, you'll have people that are sitting there, as the term is, holding the bag at the end of the month, like, hey, where do I send the oil? And then, I'm sitting on a desk in Southern Manhattan. What are you talking about? And so that creates, definitely some interesting opportunities for those that actually could be put the physical.
You had an opportunity to get paid. Oil went negative. So if you had the ability to store it, you could have made $50 a barrel to just literally take it.
There's an interesting overlap here. I was, in my personal account, invested in a triple short oil ETF that month that decided to close down before the end of the month. As come to find out, was they're right. And they sent me my money back before making
thank God. Yeah.
massive amounts of money. They were able to be a little bit sly about that. But that's why you got to read the prospectus, I guess. I didn't jump into that. Can I
torture an analogy to move to on this? Is that the dual nature of futures with the contract versus the physical? There's a piece of cryptocurrencies that shares that, where it is both a currency, but then the protocol programming side of it is it's a whole nother piece that I feel like, at least from a DC perspective, because all the regulators are kind of focused on it as either an asset or a security or what have you, and I feel like the crypto universe has tried with Web3 to start introducing the concepts of what the protocols can be or can do in the conversation. But I still feel like the regulatory side of this is a little behind on what it really is, and that they're still thinking about it as a currency. How do you describe that duality, that nature of those two aspects of the technology?
When I used to work in sports, we would say, if you hurt your elbow and you go to a therapist, they rub it. You go to a surgeon, they cut it. When you go to a regulator, if they're a commodity regulator, guess what? They think it's a commodity.
Right.
Others think it's a currency. Others think it's a security. Usually that is directly correlated with whatever regulatory body they sit within. I had a call just before this with a lawyer I really respect and trust in the DC area, an ex-SEC person. And we were talking about how NFTs are to be classified, to your exact point, which is dead on. Are we trading a security? Well, here are the attributes that make it a security. Are we trading a commodity? Or are we actually trading something that is viewed as a store of value, and thus are we money transmitters? Right. There's a scenario where all three of those things are correct. And so which regulatory regime do you subject yourself to? And prior to Gensler, I believe there was way more tug of war between the CFTC, the SEC, and there's kind of been some lines in the sands now that are making it a little bit more clear who's responsible for what. But if you are operating with a commodity, you have to register yourself as a commodity pool operator, different than as a security, as an investment management company, right? Now, if my underlying assets are commodities versus currencies, all of that kind of trickles through layers of regulation that really, as we used to call it at Goldman Sachs, I'll get slapped for saying this, the anti-business unit. Sometimes it's just the anti-business unit. It's like, that makes too much commercial sense. We need to stop it. And we weren't talking about the regulator. We were actually talking about our compliance people internal when we'd say that. But there is a lot of tug of war that will persist between, is this a commodity? Is this a currency? Is this security? Whose turf is this? And actually some of the attributes of some of these assets check multiple boxes, and that's a whole nother layer.
How do you think about that from the investor perspective as you're looking at the broad space? Because obviously you're doing a lot in the Bitcoin space, but the protocol space is like,
I'm way more active in the protocol space. Actually, I'm a Bitcoin supporter and an investor in it, and believe in it long term. I tell people I don't want to give price predictions for 12 days from now, but I'm happy to give it to you 12 months from now. And so that's just, Bitcoin is what it is. Bitcoin has a bunch of these attributes. Bitcoin is a store of value for sure. Bitcoin is used as a currency for sure. The method that if you're buying and selling it because you believe in its value, you're not trading a currency per se. And there's a delineation also within the kind of ecosystem of blockchain where there's a differentiation between a cryptocurrency and a digital asset. That's
a really important point. Yeah.
Yeah. A cryptocurrency in the space is something that has the function of a currency. And there are certain that only aspire to be a currency. And then there are digital assets that have attributes that make them more of a security or a commodity because, as you referenced with Web3, they have true function in whatever their app might be. And therefore, it's more of a digital asset representing an ownership interest in a business than it is a currency, for lack of a better term. And I mean that, for lack of a better term.
Well, give for our listeners, give a few examples for that. So when you look at the space,
oh man, I'm on the spot now.
Yeah.
You know what? I'm scared to do it. I'm scared to do it because I don't want to say the wrong thing.
I got like an ENS name domain a little while ago, which in theory will provide unified login type of, there's a bunch of applications, but my understanding is that is technically structured as an NFT. Is that's actually the technical way that works, even though people's minds, I think they're thinking about NFTs as like a digital work of art, or however they're kind of thinking about it.
So NFTs as a digital work of art is the Trojan horse. And I believe that a lot of people in blockchain are thinking 3 chess moves ahead. And I believe that the world is being exposed to NFTs in its easiest to consume structure, which is a digital work of art. Because you and I look over your shoulder, you have a piece of art. There's no true chain of title to that work of art, right? So it's
on loan from my 11-year-old daughter, but
there you go. Well, the IRS wants to know what you're, carrying that as. But NFTs really are chain of title. And I explained years ago and got some friends in the industry upset about explaining that title insurance will be in the past. Because an NFT is a clear chain of title. I won't have to buy insurance against the fact that the person I'm acquiring from rightly and freely owns it. So
and you won't have to pay a fortune to do a title search.
In New York, you paid 2% of the total transaction value in title insurance just to insure yourself against. So if you're doing $1 billion tower in New York, 2% fee goes to the title insurance placer, and there's 0.0 risk. It's just something that got included in some bill.
Yeah, and it's just a law that we have to do it, but we now have the technology to eliminate it, but we haven't created the laws to do it. I think people get too caught up in, someone bought a monkey for $10 billion. That's fine. I don't know if it's worth $10 billion or not, but the technology behind the NFT is game-changing technology to lower the cost on a whole host of financial products that we have, and even more importantly, to create a ledger to show chain of title, whether you buy a painting, whether you buy an expensive bottle of wine or shoes, or fancy sneakers.
Will, I'm interested in your take on the sports side of this. You've got a background and are still very involved in sports management. To your earlier point, in terms of what happens first is usually the most understandable, right? You saw a lot of athletes rush into NFTs. I'm a Patriots fan. I watched and tried to buy as Julian Edelman and Gronkowski and others sort of flooded to this space, and you're seeing it more and more. explain to me kind of what's happening there and where you see that going. I mean, that's to some degree of work of art, but it seems like athletes are seeing a real value for themselves personally here, maybe breaking down some of the
It's a new asset class, this whole digital collectibles thing, which, certainly chain of command and authenticity is paramount when it comes to collectibles. Blockchain solves that. Some of these athlete-inspired things are interesting. The parallel that I thought was well drawn was when someone said, there's 1,000 Michael Jordan rookie cards that were ever printed. That's a documented figure. Right. My ownership of one is a portion of a fixed supply that will never be more of. A lot of these athlete drops that you've seen in the NFT space are fixed supply, which, oh, by the way, is a common theme throughout all blockchain and digital assets, which is profound, and I'm happy to reference that as well. But if I'm issuing a digital collectible and I know that by owning it, I own one of a fixed amount of them, there's a clear chain of command, I can always prove its authenticity and exclusivity, if you will, then that is going to have value. I don't know that the market is mature enough for that price activity to be something to kind of make it an investable asset, but there's a lot of speculation happening there. But, as economists, love to discuss, Bitcoin even is the same. Bitcoin has 21 million maximum. Many think that millions of those are lost and will never be, into circulation, if you will. But if you're predicting future price activity in any asset, if I have to predict the future price of gold and I have to predict the numerator of supply and the denominator of demand, or the inverse, now I have two variables that are affecting that future price activity. If I can fix the denominator, if you will, and the only variable is the numerator, that becomes really sexy for economic design.
Yeah.
And so what you're seeing in Bitcoin and what you're seeing in all these fixed supply digital assets, and you're seeing in NFTs that are very explicit with their total volume. And you referenced the monkey's worth $10 million. I happen to own one of them, not worth $10 million, but I own one of these Bored Apes. And it has gold. It's a gold grill. It has glasses, right? It has, if you go on OpenSea and search under Bored Apes, what's even more fascinating than the community built around it is you can sort by its unique traits. And you can see that, there's 10,000 of them, but there's only 76 that have a gold grill. There's only 140 that have glasses, and there's only 14 that have both a gold grill, right? And so you start to see how people attribute value to the exclusivity and the uniqueness of these underlying assets. Just like there's only one corner store on 42nd and Park, and that has more value because of its limited supply and its high traffic than the one that's on 43rd and Madison. These are the same principles that are just showing up in the digital space.
The other thing that I think is super interesting about this is that on some level, this has always been true, but crypto has made it almost explicitly more so, is that things have value because people agree that they have value. And the reality in the crypto space for some of this stuff is that people who have a platform who can promote some of this stuff or create value through broad knowledge of something, that's something that they can take advantage of and monetize in a way that I don't think has been as explicit or real in the past. Like Bored Apes is like, there's I don't know if you were tracking this, but there were like some Bored Ape owners who were disappointed that Snoop didn't wear like an ape sweatshirt for the Super Bowl halftime show, right? It's like, that's a good example of where like the more something can have notoriety, the more valuable it becomes because people all see it. Like I was just reading that. Do you guys remember that Banksy piece of art where he shredded it?
Yeah.
You know how much that sold for at auction? It was like $1 million.
Got shredded or after?
10 million.
pre-shredded, it was like $1 million, and it just sold for like $25 million.
Oh, wow.
Well, there was another interesting one from Banksy that a friend of mine actually sold at Sotheby's for $10 million, and then a blockchain group called Particle acquired it for $10 million, and then created 10,000 shares of it, and did that as an NFT drop, so you could own a fractionalized piece of the real work and the digital work.
Yeah.
The most fascinating one I saw in that space that I think was the most provocative, I should say, was Damien Hirst, who created 10,000 works called currency, physical works, and then created 10,000 digital works that matched. And you bought one, and you got, in 12 months to the day that you bought it, he gives you the right to either destroy the digital or destroy the physical.
Yeah.
Oh, that's really cool idea.
And it's going to be, at that point, people are going to have to make a decision, which is going to have more valuable.
Yeah.
I have a whole bunch of art that I've collected over the years, to my dismay, because there's no liquid market for this art. Right. And I wish that I was displaying more of my daughter's artwork like you are than I am of some of the stuff I have hung in my house, because it's the most illiquid asset class in the world. There's no bid. There's no efficient market. I could put it on eBay, but I can't guarantee that there's an educated group going to bid against it. And so it just torches you.
And Sotheby's doesn't do those auctions for free.
No, and they don't want a $50,000 piece of work they don't even get off the couch for.
Yeah.
And so it's just this no man's land. Whereas with NFTs, there's a true 24/7 deep and liquid market always to trade those things. And that's another dynamic that these digital assets create, is they trade 24/7. They're deep markets. There's always a bid for it, and there's always really efficient pricing information about the asset because everything's public.
So, Will,
does your fund trade in NFTs, or is it just?
We don't at all. It's just something I track.
The advice I heard from NFTs is basically copied from art, which is basically like, go for the things that you really like and will value yourself. Do you think that that's accurate? Is that like a good way to think about NFTs? Because it feels to me like, as you describe, it's not a perfect analog, actually.
So my wife and I are building a house, and we are planning for multiple locations in the house to have art walls, if you will, with electric run to them. Because I do believe that, the television above everybody's mantelpiece will display art in the future. And instead of that being a black screen, that will be an NFT that people uniquely own. And it will be ways to validate the fact that that's not just a random reproduction of the Mona Lisa, that's the Mona Lisa. And so do I believe that the future will have digital works of art? You have a black screen over your shoulder right now that's not displaying anything. I believe that those that hang on every wall in America, for lack of better math, will showcase art in the future, and it will be clear to people if it's a screenshot of one or true ownership of it.
Let me just ask the counter argument to it. Wall Street Journal last weekend had a big article on OpenSea, if you're familiar with it, but something crazy they disclosed, like 80% of their offerings are patent infringement or other issues. There are still some big kind of mass adoption hurdles that a lot of these companies have to get over. How do you see them doing that? Where do you see this going in the next 12 months or so?
Funny you should say part of the legal conversation I had before this included that as well. And the question I asked of this former SEC attorney was, who does the onus fall on?
Right.
If I'm the issuer, is it my responsibility to qualify you as the buyer, KYC you, AML you? Or if I sell it through OpenSea, is it their responsibility as the platform to be the person that's both validating me as a seller and that the work that I'm putting forward is mine and not infringed upon, or validating you as the buyer and ensuring that you're not somebody laundering money or somebody, acquiring something that shouldn't be, that doesn't meet qualified buyer standards and the like. That is yet to be defined. And I don't know that we're close to the definition of it. I do know that the conversation I had with her was this is very similar to the ICO craze of 2016-17, when everyone was just selling stuff with no securities regulation. And then Fast forward, hindsight 2020, a lot of projects got massive fines and whatever because they didn't do the right thing. And there's a little of that in the NFT space right now, where there's a little bit of a Wild West. Over time, it'll be more clear whose regulatory regime that falls under. And it will be, a little bit more clear how you can buy those things in safe environments and whose responsibility it is to make it a safe environment. But we are not there yet.
Great. Well, we're just about out of time. Let me bring it back to what you're working on at Valkyrie and your hedge fund. What are you excited about for the next few months? What should we be keeping an eye on in this space?
Yeah, we're excited about this BTF that we have, which is the Bitcoin ETF. That's just a great thing. We don't make a lot of money doing it. It's just a good thing for the industry. We're excited about VBB, which is Bitcoin on balance sheet. We're excited about WGMI, which is a kind of crypto acronym. We're going to make it. But that's our Bitcoin miners ETF. All of those are accessible in your Schwab account. You can buy it right through whatever broker you use with your personal money. The hedge fund is just a really specialized thing. We're not going to manage a lot of money there, but like I said before, that the hedge funds in that space, we can deliver venture-like returns, but we're doing it with equity-like liquidity. And that's what these digital assets allow for, is I don't need, in venture capital or private equity investing that I do in my private life, I'm making a bet that the investment I make is going to be the winner 5 to 7 years from now. Whereas with digital assets, I only have to be right for 5 to 7 days. And the fully liquid nature of that market makes it very exciting to be trading in and out of assets and utilizing data. The other dynamic that's important is all of these blockchains are public ledgers. And so we've built algorithms and deciphering tools to pull down data and have real-time data on user growth, revenue growth, total value locked into the different blockchains, and made ratios against pricing activity that shows us where there's dislocations and opportunities. It fascinates me that we continue to trade U.S. equities 361 days a year on speculation, and 4 days a year for 1 hour they tell us in the morning what's going on in their business for that quarter.
Yeah. Right.
Yet in blockchain, we have this fully public data set, and not all of these things need to be centralized. And I think what decentralization is educating folks on is that there's more effective and efficient ways to move in and out of liquid markets, and that, we don't necessarily need to pay 100 basis point spread to Goldman Sachs for every trade that we enter into, because a lot of that mechanism can now be run by computers, and it's a trustless environment that is actually a safer place to play.
I think it's a really good point. And, I don't necessarily have a strong opinion about what the intrinsic value of all these things are, but I know when two very large regulatory bodies are battling over who should regulate these things, that this is probably an asset or a currency that is here to stay, Yeah.
And so what I tell people is Bitcoin deserves a place in every portfolio. I think it's becoming irresponsible for institutions not to have 1 to 5% of their treasuries in Bitcoin. It's a store of value. It's deserves a seat right alongside gold, and is probably a better risk return profile than many assets that are keeping people comfortable. I do think it's wise to get exposure to these layer one blockchains, which like Ethereum, I explained, as like the operating system on your iPhone on which applications are built, and the future of blockchain will be built on Ethereum or Solana or one of their competitors. And so having exposure to that more broadly, is important. And then, if you want to get into NFTs and you want to trade DeFi tokens, you better do it with people that are living and breathing it, because it's a 24/7 market. And just like anything else, unless you're living and breathing it, you're probably not going to end up winning. Yeah.
I also think just the fact that someone like you is getting involved in it. I know a lot of the early founders of this, they're not even libertarians. They're even farther out there, and they're not someone you could put in front of investors. So this is definitely becoming, mainstream. And the fact that, you're involved in, I think, is a good sign for the future of the industry.
Yeah, I'm constantly impressed with the quality of talent that is committing to blockchain. And I have yet to meet anybody involved in blockchain who wants to be less involved tomorrow than they were today.
Right. Yeah.
That's great.
So we'll give you one last chance to give the address of your new home so we can all visit and see your new digital artwork.
No, we're going to keep that decentral.
Yeah, decentralized. That's right.
That's not going on the ledger.
Perfect. Well, thank you for coming on. This is a great conversation. I learned a lot, and we really appreciate it. So thank you.
Happy to see you guys. Thank you so much for having me.
You too. And for all our listeners, we'll leave some information on Will and Valkyrie in our show notes. I want to thank Matt and Brendan for teaming up with me on this episode. We'll have a few more of these crypto conversations coming at you over the next couple weeks. And as always, you can find out more about Hamilton Place Strategies in our podcast on our website, hamiltonplacestrategies.com, or follow us on Twitter at HPS Insights. Thank you all for joining.
Thank you for listening to the HPS Insights podcast, produced by Hamilton Place Strategies. For the latest updates, follow us on Twitter at HPS Insights and follow us on the web at hamiltonplacestrategies.com.